Next on stage, Trends in Infrastructure and Project Finance. Moderating the discussion, Alberto Faraco, Senior Vice President, European Corporate Finance Asset Finance at Morningstar DBRS. Joining him on stage, Suneil Ramesh, Senior Vice President, European Corporate Ratings, Asset Finance at Morningstar DBRS, Spyridon Venetsianos, General Manager, Head of Structured Finance, Corporate and Investment Banking at Eurobank. Please welcome our moderator and speakers.
Okay, I think we have been introduced, so let's jump to the introduction of what we will cover in this panel. I think we will structure this in like two parts. The first part will be about how ratings can actually help on funding infrastructure projects in Greece, and now that the sovereign is investment grade. And then the second part will focus on new trends in infrastructure, particularly digital infrastructure, which is one of the hot topics in infrastructure, especially in Europe. We cover, our team, Suneil and myself, we cover infrastructure and project finance ratings across Europe. So we plan to give a bit of that European perspective of what is going on outside Greece. Spyros will help us with the local market and will give the domestic view on these trends as well. So let's start with the first part. I think it's been a pretty long journey since the sovereign crisis and all that pain that affected a lot of Greece. Now seems to be consensus that Greece is now in the investment grade territory for all the rating agencies. We upgraded Greece, I think it was back in September 2023 to BBB low. And then pretty recently, earlier this year, in March, it was upgraded again to BBB. So maybe first to Suneil. I mean, unfortunately, we are not sovereign analysts, so we are not the right people to speak about the trends of the drivers of the rating, the trends in the economy. But we can clarify how this rating flows into our infrastructure and project finance ratings, and what does this BBB rating for the sovereign mean for us, basically.
Sure. So with Greece at BBB with stable trends, it's unlikely to have any capping effect on the ratings of project finance or public-private partnerships. And the way we look at that depends on the type of project. For instance, in availability-based projects where the rating is based on a fixed stream of payments, and that's usually from a public sector authority. So that counterparty's rating is influenced by the sovereign rating. And then in volume risk projects, such as toll roads, where it's a pool of customers who are paying, there's not a single counterparty, but then we still don't expect the economic fundamentals of the area to be completely dealing from that of the sovereign. So in those kind of projects, although it's not a hard cap, it still impacts the rating. And right now, with Greece being at BBB, which is one notch higher than the minimum investment grade, there's unlikely to be any constraint on projects, provided that the financial metrics and other risks such as construction risk are adequately factored in.
Thank you, Suneil. So then how are these infrastructure projects being funded in Greece, and how do you think grade ratings can actually help the financial system here in Greece?
Yeah, thanks a lot for the question. And actually, in Greece, we are in a position that the Greek banks, all of them are well capitalized. They have a lot of liquidity after the crisis. They have been structured like that. So they are competing very intensely between them in order to finance these projects, get a bigger share in the market. And comparing with the international markets, now that we have the opportunity to say also international projects, I think that the terms provided in Greece are very competitive, and that's why international banks are not yet here. And I believe a good reason that we didn't have any Eurobonds was the cap at the rating, because nobody was expecting a few years ago to issue a rating for a project that would be investment grade. Now I think this trend changed. I believe that projects can obtain, and we have done some analysis to indicate that with your help as well. So the whole feeling is that the ratings can, of course, help the issuance of bonds, and this is an alternative pool of money. Nevertheless, ratings are also important for banks, and of course for international banks, that having a bank that did nothing in Greece for 10 or 15 years, coming in Greece and finding that the project has a credit rating of BBB, they're going to have an additional argument in front of their credit committees. Is going to be very supportive for them. But it's also a very important tool for us in Greece. And what most people don't know is that ratings help a lot, external ratings help a lot the banks in order to achieve better capital relief. So we consume less capital if we present to our regulator that we have obtained a credit rating by you, by your competitors, that is investment grade, etc. Of course, having a credit rating below investment grade is not very helpful, but this is the big discussion, I think.
Yeah, but that's precisely why we were asking this new environment. I mean, I think this kind of capital relief is also an important consideration for ratings. So now, I mean, also an important trend that we have been seeing in Europe is an increasingly movement of public markets to private placements. So private credit is very interested, especially in infrastructure and project finance. Particularly the US PP market is pretty active across Europe. And for that, typically a rating is needed. So basically that can be used also to access these kind of markets. Do you think that US private placement or institutional capital to be also a diversification option for Greek companies as it happens in Europe, or you see more international banks? How do you see that potential opportunity?
I think progressively everything will happen. The reason would be the concentration that the Greek banks have in their clients, and the clients desiring to assess other routes. These markets offer different advantages. The private markets are slightly more aggressive than senior lenders. Of course, margins are higher, but of course, there is this investment-grade universe that is more reasonable. And international banks, of course, are selective, but offer some benefits. So I think we are in a transitional phase. I don't see the Greek banks losing the monopoly, let's say,
their strong position.
The strong position, let's say so, in the Greek market. But you always need to keep your options open.
Mm-hmm. What do you think are the main challenges for that? I mean, why they won't lose that? It's a matter of a track record with those, or knowing the customers, knowing the clients, or it's more of why international banks are not so competitive?
I believe it's a combination of everything. And honestly, judging from my previous career in Bank of America, going to a credit committee and say, guys, we have to go to Greece. It's a small country in this corner of EU, and we need to offer terms that are potentially slightly more competitive than the terms that we can achieve in France or in Germany or in Austria. Mm-hmm. The credit committee will say, why bother?
Okay, let's move to the second part. Infrastructure is kind of an evolving type of asset class. I mean, if we think about definition of infrastructure, I think everyone could say one, but I think there's one common factor, which is the essential nature of these assets. And this essential nature kind of evolves with society, and one of the key trends in society is digitalization. I mean, I think it's clear that connectivity data processing and all of that is becoming critical and even essential in Europe, not only in Europe, but probably in all developed countries. So I think this is, discussions about digital infrastructure are something that we are having every second day. Suneil, can you give us some examples? What have we seen in the digital infrastructure space in Europe, and what type of structures are presented to us on that sector?
The kind of projects that we have looked at in Europe in the essential digital infrastructure space, these include telecom towers, fiber networks, and data centers. And they are structured differently, and that's based on the companies and what methodology we could use. Sometimes they are structured as project finance, and that is when the activities are very restricted. There is restriction on additional debt, acquisitions, and dispositions. And then there are enhancements such as the debt service reserve account and so on. When we are looking at transactions through the project finance lens, issuers can generally have higher leverage or target a higher rating. But for that, we also look at that there is a long-term stream of cash flows, generally backed by contracts. It's not necessary that the contract should extend for the whole debt amortizing term, because in this space, because of the essential nature of the assets, we expect that the contracts could be renewed, and that's something which we will look into more closely. And then there is expected to be high barriers to entry. And generally, it's monopolistic, although it could be oligopolistic, or there could be competition, but we'll have to factor those in. When those structural features are not present, then it could be rated under the corporate methodology, either the communications methodology or services. But where project finance cannot handle generally under our criteria is when there are complex tranching, like multiple series of instruments, and those are generally handled under the structured finance methodology. And there are other variations under which that methodology would be more appropriate. So initially, it's a discussion on what is the structure and what is the appropriate methodology that is to be used.
Mm-hmm. So basically, there are various ways of structuring this kind of deals. Spyros, what about in Greece? What is the status of the digital infrastructure sector? How is this being funded? A little bit high level.
Yeah, actually, it's extremely interesting times, because I think we were far behind. I believe partly also due to the crisis in both networks and data centers. And the last 2 years have been a period that we try to understand the market, try to help the clients, try to obtain know-how internationally, because networks, there have been a number of transactions in order to create this digital infrastructure that was so important for Greece. Mm-hmm. Of course, it was a bit complicated because overbuild is permitted in Greece. So we had to to manage with a number of headaches, apart from learning the basics. But I think that after a few transactions, we think that we understand the basics. And we also have the data center market. That is a market that I think, speaking with everyone in this room, will tell you that, whoa, this is the future, and Greece should be investing there. And of course, the banks will say, we want to finance these projects. Nevertheless, it has taken a lot of time for most of these projects to ramp up and start gathering all the necessary permits, connections, access to power, find the right site, etc., etc. So it will become bigger and bigger. And for both of them, there is an amazing tool, which is called Restructuring and Resilience Fund, or RRF, briefly. I believe all of the audience knows about that because it offers 1% fixed interest rate. So, you cannot beat that.
Difficult to beat, no?
Yeah, difficult.
Okay, so let's move to fiber networks. You were talking about overbuilding here, and I think when we talk about fiber networks across Europe, there are a lot of very different business profiles. I mean, we can see from almost monopolistic players or monopolistic players in rural areas with strong regulatory frameworks, or we can see as well more competitive networks with overbuild, on which typically they rely on tenants, on anchor tenants, i.e. internet services providers, to commercialize that network. On those, I mean, what are the key elements of analysis and how they are, in which sense they are different? Suneil.
When we analyze these projects, fiber networks, under the essential digital infrastructure methodology, and because it's an offshoot of the project finance methodology, we focus primarily on the financial metrics. So metrics such as the debt service coverage ratio and project loan life coverage ratio, which is to assess refinancing risk. But there are other drivers also, and it depends on the structure, would be the off-taker credit profile. So in the example which Alberto mentioned, when the structure is monopolistic, such as in France, so it's not that you have competing networks. So the credit profile of the off-taker is not that important because the assets would continue to operate, the contracts would be honored because the services have to be provided to the end users. So we can almost delink the rating of the counterparty to that of the project. And on the other side, there are situations such as in Spain where there is competition, at least heavy competition in the urban areas, less so in the rural areas. And you have multiple networks operating in the same area. So the argument is slightly weaker on that. So we do look at the credit profile of those entities. Typically, the anchor tenant would have a greater proportion. But let's say if there are multiple entities, then we would take a weighted average of the credit profile. And that could potentially act as a cap. So if we still believe that even in a stress situation, or if they go into bankruptcy, the contracts would still continue, and that could be assessed by looking at what has been the such situations. And if there is sufficient resilience in the project, then we could have the rating on the project higher than that of the off-taker. Could be one notch, and in rare cases, it could be slightly higher than that as well. So it's not completely delinked, but it could be slightly higher than the cap.
Mm-hmm. Thank you. What about Greece? In terms of fiber, you already introduced a little bit more, but what is the status? How is it developing? Is there any time at which the rollout may be completed and basically the fiber will be almost elsewhere? What are the plans, or what is the status in terms of fiber?
Look, it's a quite dynamic market. Mm-hmm. Nevertheless, in Greece, we have 3 incumbent telephone services providers that have been assigned with some FTTC areas, but FTTH is free. Mm-hmm. So initially, all the incumbent service providers have embarked in an approach to develop the FTTH network in the areas that they already have FTTC. Nevertheless, in this situation, we have 2 new entrants. The one is quite smaller. The one is PPC that would like to take the opportunity and based on some advantages that they have, tap the market. So the penetration in networks was, I think, one of the poorest in Greece. I'm pretty sure that in no more than 2 or 3 years' time, we are going to achieve the EU average in penetration, at least in the main urban areas. In relation to the more rural areas, there have been some PPPs that have been awarded there is some delay with this. But this is the overall situation, and I believe that, as discussed, this is a vital infrastructure. So it's very important to have it, and I think all the banks have understood this need. The question is how competitive this market is going to be, and given that you don't have a lot of data, how competition is going to work. We felt a bit uneasy with some of the aspect of the financing.
Yeah, that sounds like the typical concern or the risk factor that we also face when there's competition, and particularly in urban areas. And what about data centers? What are the key hubs in Europe and the key markets, and why are they what they are, basically?
The key hubs, that's influenced by the end user demand and also the connectivity, so subsea cables, for instance, and also the availability of power. So major locations would be London, Frankfurt, Paris, Amsterdam, for instance. And that's something which we would look into, especially when looking at the credit profile of co-location data centers, because we could look at the transaction beyond the term of expiry of those contracts. The renewal is important, so either the terms of renewal of the existing customers or the ability to attract new customers. So that's influenced by the attractiveness of the location. And in the case of hyperscale data centers, the importance of the data center to their operations becomes more important.
Yeah, basically you were talking about this recontracting risk that is kind of the main considerations when we talk about that, because typically the counterparties are pretty highly rated, the standard technological companies, Amazon, Microsoft, all of these AAAs, AA's, or these kind of ranges. So basically, what would you say are the key elements for us to assess if that lease will be renewed or not?
It's primarily on the importance of that data center to their operations. So we do look into like the technical aspects of the data center. And right now, another element that we are going to look more closely is with the importance of data centers with AI, so whether the repurposing is possible. We generally don't expect the demand to reduce for non-AI data centers, so there's still that demand, but the ability to renew the contract, so that would be higher when the ability to repurpose is higher, that the power supply and the infrastructure is already there. So these are the elements we would consider now. And then obviously the contractual terms as well. Sometimes we see terms where they provide for early termination, even within the term of the contract, and we try to understand the reasons why it might be exercised or not exercised, and if it is exercised, what would be the compensation that would be available to the project.
Spyridon, what about Greece? And do you see Greece becoming an important hub for data centers, or?
We hope so. Actually, there are a lot of elements having to do with Greece that support this thesis. Cheap financing, I started with that, I don't know why. The second one is the strategic location, being at the edge of Europe, but very close to Middle East, and there is a corridor there. We have plenty of energy, and I believe this will increase as we see that new renewable projects coming in the market, and the renewables penetration is huge. And I think you have personnel that is educated, so you can have also some the staff that you need, or the environment that you need for the staff that you're going to bring from other countries. So there are a number of elements. We believe that it's totally necessary and it's the future, and we also believe that, of course, the risks that you describe are very important. But our feeling is that, at least in Europe, obtaining permits for a new data center, it's very tough. So it's a rare commodity, if I could say so, having a data center. Of course, there is this headache about the specifications and when AI is going to be more important, whether you can have the appropriate cooling and the appropriate intensity in terms of power in these data centers. But still, we believe that it's going to be a necessity in a strategic location. So we have high hopes about an acceleration in this area. So far, we are doing initial steps.
Still an issue. And which would you say are the main constraints? More proceedings to get licenses, access to power, which would you say needs to be done, and who has to do it?
Yeah, I believe it's a combination of all of them because we have seen in the press the past months and years how difficult it was for international investors, even Microsoft that is already constructing something in Athens. There was a lot of struggle in order to obtain all the permits, and I believe even the Prime Minister was pushing for all the details to be sorted out. Greece is not a very simple country, to say at least, in terms of obtaining all the required permits.
Okay. Yeah, I think this is all we were planning to cover, so let me wrap up a little bit the key messages. First of all, I think this new, or not that new, to be honest, the investment grade sovereign rating allows the project financings or infrastructure finances or everyone else to be rated investment grade by their own merits. So basically, it's no longer constrained that. And the benefits of having a rating is not only to get comfort to directly the lenders to get better conditions, but also for regulatory purposes, as Spyros was saying, there are other uses. On that, I mean, I think infrastructure is an ever-evolving space, and we are not anymore talking only about toll roads, airports, ports, this kind of traditional infrastructure. I mean, I think the digital infrastructure is on our day-to-day and is becoming essential. Fiber is being deployed at its pace here in Greece, probably lagging a little bit behind some countries in Europe. Others are still on a pretty early stage. I mean, UK and even Germany are not extremely developed, but will come. Thankfully, you have this very cheap funding to do that. So I think probably hopefully that helps. And on the data center space, I think we agree. I mean, at some point, this AI thing is only starting. And sooner or later, all this capacity will need to be built. I mean, no one probably knows up to what extent, how many megawatts will need to be built. There are plenty of estimates, but it's clear for everyone that a lot of funding will be needed for that. And hopefully Greece managed to solve all those constraints to become a real hub because, geographically, it sounds like a very attractive situation. So thank you, everyone, for your attention to this panel. I hope you find it interesting.